Hi guys, welcome to Midweek with Indiacharts. And this is Jay Vora with me, and I'm Muskan Kapoor, the host of this midweek session. So, what we are basically going to do over here is we are going to discuss how the market is behaving during the middle of the week. So, we will be meeting every Wednesday. We'll be discussing how the market is progressing, what are the latest news, and what we can expect in the coming few weeks. So, I'm joined with Jay Vora, and we're going to raise a few questions and discuss a few things today. Hi,
Yeah.
let's start.
Sure.
So, something that I've been seeing around the news lately is the China and Taiwan conflict. And that's been going around everywhere. People are talking about it. What do you think about it? And how do you think that's going to impact the market?
That's right. So yes, I mean, Taiwan and China news have been floating around. And in fact, if you see the market reaction with that respect, I mean, it is not so great, which is suggesting that maybe things haven't worsened much yet. But yes, I mean, I can definitely see many of the WhatsApp news, roaming around wherein all the tanks are going and, they are showcasing as if there would be a war or something of that sort. But when I purely look at the price action, it doesn't say so. But, there is one interesting observation, I want to highlight, for which, wait, I'll share the screen.
Okay.
So if you see, this is a Shanghai index. Okay.
Correct.
So the Shanghai index is basically Chinese market, main index. So if you see over here, this entire rise is basically very debatable, whether this move is an impulse move or a corrective move. Okay. So what is the importance of impulse move and corrective move is that if this is an impulse move, then there is a sure shot thing that once the correction is done, then one more leg of up move will start. Okay. But given that all the moves are overlapping, okay, so it keeps us in doubt whether this entire move is a corrective move or an impulse move. So what do we do to check it? So basically, even if I go to the weekly chart, then this looks like a three-wave rise. Okay. Now, three-wave rise by definition is a corrective move. Okay. So that means that if this entire move is a corrective move, then maybe eventually this low would be broken. If that is the case, then probably all the news flow that we are seeing around right now might be true and maybe something ugly might happen, going forward. But what do we look out for? So over here, you can see that there has been a 5-wave decline, okay, which actually indicates that it is an impulse move. So this is what has happened that, once the impulse move has developed, there was some degree of pullback. And now there is again next leg of down move that is starting to unfold. Okay. But, this is surely a tug of war between bulls and bears, and for which 61.8% retracement mark, which is around the 30,080 level, this becomes a very crucial point. If the Shanghai index breaks below that, and if it starts sustaining below that, then maybe the news flow which we are seeing right now, which is not causing much damage as of now, but maybe it can lead to some sort of correction or a deeper maybe cuts going forward. So this is one thing that we should surely keep in mind and trade our plan and plan our trades accordingly.
Will it also affect the Indian market?
So usually, all the global markets do tend to move together only. Okay. So in that case, if something has to go wrong in China and Taiwan, then definitely it is going to affect all the markets. But, going forward, we will discuss, how the Indian markets are poised. And, I can probably show you the setup of all the 3-4 key indices and maybe we can have a look at that time.
So we all know that the RBI MPC meet and the outcome is in a few days. What do you think we can expect out of it?
So yes, this is actually a key thing, which probably Indian markets would be looking out for. So the expectation is that maybe 35 to 40 basis point hike is in place. I think that is sort of factored in the market right now. But the key thing that people would be looking out for is the RBI commentary. because, RBI stated that the inflation level, which is within its tolerance band is around 6%, but we are still running the inflation at 7. I mean, the CPI is at 7 since last 6 months. So, the outlook regarding that would be crucial, and it would be important to understand how RBI thinks about it and how is it going to approach in terms of rate hike. Because, frankly, the recent rate hike, that has already started to pinch everyone, because most of the loans, which were on the repo link, that has been raised, and now the interest component is actually a lot more in the EMI, and due to which the EMIs are getting elongated. So people have already started to feel that pinch. If the rate cuts, I mean the rate hikes, are done massively, then it might also dent the sentiment. So in that sense, this will be a key event, in that respect to watch out for.
Correct. After this meet is over, like ahead of when this meet is completely done, what can the market expect? Where will the market be placed? What is going to happen?
Sure. So if you look at the Indian indices, many of the indices like Nifty, Bank Nifty, the mid-cap index, all are at a very crucial juncture. So let me share the screen and, show you the setup. So if we see the Nifty index setup, you can see that the entire fall which the Nifty had done, it has almost come back to the 61.8% retracement mark. Okay. Now this, if this is a bear market rally, okay, then it is, I mean, we are very close to doing a pullback. I mean, we are very close to completing the pullback. Okay. So in that sense, this key retracement level getting hit ahead of the RBI meet is very interesting, and we need to see the price action. So as of now, there has been no signs of reversal because, as we have stated in our accounts as well, that this is probably W, this is X, this is Y, this is X, and wave Z is going on, within which this is A, B, and C wave that is going on. So for C wave to complete, ideally you should have first a negative close. So since past 2 days, the market is sort of indicating that, there can be, a negative close, because during the day it is selling off, but later on it is making a comeback. Okay. Because of which eventually on the closing basis, it is not seeing a red or a negative close. So until we don't have a negative close, you cannot really call it as a reversal yet or a completion of a pullback. So given that it is not giving any signs of, showing that the pullback is complete, so there is a scope that Nifty goes and hit towards this upper trend line, the resistance line, which we connect from all the tops. So this comes to around 17,780 to 17,800 levels. So, then this level becomes the key level to watch out for, unless we don't see a negative close. Now, if you see similar setup is probably for Bank Nifty as well. So if I look at the mid cap chart, so you can see that, we are coming very close to this trend line. And top of that, if I do the entire retracement for the entire fall, so it is also around the 61.8 mark. Okay. Yeah. So, this becomes a very crucial level. In fact, in this chart, today's data is not updated, but today it saw a negative daily close. So at least in mid cap, there is some sort of confirmation that maybe this pullback is getting over, but that is not, seen in the Nifty index yet. And in fact, Bank Nifty, I think, also marginally closed negative. So let me look at the Bank Nifty chart. Yeah. So if I see the Bank Nifty chart, so you can see over here that even the Bank Nifty chart is at 61.8% retracement. And as I told, that in today's trading session, it has seen a negative close. So actually, Bank Nifty along with the Nifty Mid Cap Index is showing that maybe the wave C in Z is possibly getting over, but we would need some bit of further evidence, or some bit of follow through to confirm that. Now, the reason why Nifty is probably not, that weak is because if you see the Nifty IT index, okay, that has barely seen any pullback from the bottom. Okay, so because of which, what is happening is that today, while the market was weak and the overall indices were not doing that great, Nifty IT was one of the index, which was probably up 1.5%, and which sort of helped Nifty to, float around. So in the coming days, like Sir said, that maybe the easy part is over, but now, you might have to do a lot of struggle, and, there might be a lot of rotation in which, there are few set of stocks that move higher, and there will be few set of stocks that will start weakening. Okay. So that is how basically we are poised for the coming week. I mean, in this week ahead of the RBI event.
Correct. Makes sense. It's all the eyes on RBI.
And there is one thing I would like to add, that market never likes uncertainty. Okay. So whenever there are uncertainty, that will lead to volatility. Okay. So one thing is for sure that, we might see a lot of volatile times coming ahead, and that is where, risk management will come into play, and that will be a key role, for your trading, especially.
Correct. So exactly as Jay said, that risk management is something that we have to look at currently, because we don't know how the market is going to behave, and we don't want to take any risks, and we should be cautious about it. So we will wrap up this entire midweek with this thought, and we will leave you at this. I hope you all have an amazing week ahead. We will see you next time. Okay. Thank you so much, Jay.
Thank you.